With less than 24 hours remaining on the weekly candle, Bitcoin could be closing one of the most bullish candles we have seen for months. In today's video, we're going to be diving deep into the short-term and macro price action, as well as discussing the possibility for a parabolic altcoin season. Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you so much for tuning in. I hope you're all having an absolutely fantastic weekend. In today's video, we're going to be taking a look at three separate things. Number one, the macro price action, including macro technical indicators, macro structural levels, and the weekly charts. Number two, the short-term time frame price action, what is happening right now, what you should be expecting next, and the key levels you need to be paying attention to. And finally, the possibility for a parabolic altcoin season. These are topics we'll be getting into throughout the video, so make sure to stick around to the end. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. If you are interested in taking your trading to the next level, join us on VIP. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, and exclusive analysis. Not only that, you'll also get access to our group chats, our general chat, trading chart and education chat, help, news, trade setup, and daily video chat. If you are interested in getting access to all of that, contact me in the pinned comment of the free channel. For more information, you can click these links as well. Let's go ahead, guys, and jump on in. So like we said, a pretty important video today. We have a lot to be going over. A quick start on that market data. 24-hour volume has dropped off 34.17% to 80 billion. Now, this is quite standard as we do approach and enter the weekend. Now we're coming out of the weekend. Volume does generally take a bit of a dip. With the reduction in volume, we do see a reduction in volatility, and with the reduction in volatility, we see again a reduction in liquidations, down 49.64% at 56 million. Of the 56 million, we can see 30 million have come from long liquidations and 26 million have come from short liquidations, giving us a bit of an insight in the price action over the last 24 hours. Taking a very brief look at the last 24 hours of price action, we can see Bitcoin really hasn't done all that much. We've been chopping pretty much exactly sideways here between that major 67,000 resistance and the low of this support resistance range now at 66.6k. So again, not all that much price action, sideways chop, which is indicative of again, compression, indecision, consolidation at this area of resistance, which is reflected by again, the reduction in volatility and reduction in liquidations. We'll be discussing what we expect next from here in just a moment. Moving over to the broader markets, the DXY is again closed out for the week. We are looking for a continuation down in the coming week. This will be very, very bullish for Bitcoin and traditional assets if we do see that correction. But again, we have not seen a RSI breakdown, so we do not have negative momentum here on the higher time frame, which is indicating this area of support is still an area of support, and thus we would not be surprised to see bounces from this region. The direction of which the DXY is likely to go is going to be heavily determined by the Jerome Powell Federal Reserve speech in what is this? Sitting around, we're looking at just under 24 hours now. So just under 24 hours at 5:30 a.m. Australia GMT plus 10 time. We do have the Powell speech. They'll be going over inflation data, expectations for future interest rates, how the economy is tracking along, and all this information can, push the DXY in certain directions based on the tone and narrative set or discussed within this meeting. So the DXY is going to be set for a bit of a volatile next 24 hours as we do have that meeting coming up. Moving over to the broader markets, the S&P 500 close that weekly candle above the prior high in terms of the weekly high, which is a very good sign. We did close with a weekly high. However, we did not manage to close above the high of the wick, okay, that exact daily high over here, we remained at a close of around 5327, so 5,327. We do need to break a weekly candle above that prior high to have that bullish confirmation and trigger of a continuation upwards. Overall, still looking fantastic on the high time frame. Like we said, 5,000 is a key trigger point for the bears to take control. So provided 5,000 is able to hold, we are expecting those macro continuations upwards. Only if 5,000 is lost to expect a continuation lower, as we have been saying for months. So I've told you guys this entire way up and down that 5,000 was a major bouncing point, as we have now seen. The exact same thing goes here for the Dow Jones. Again, that weekly close wasn't high enough to break that trigger point, but overall, it was a good weekly close. We are still, again, sitting above that major area of support. So while we sit above the support at 38k to 37.7, we are expecting an eventual break of that high and continuation upwards. So we are expecting that to happen over the next coming weeks. Overall, fantastically bullish, provided we remain above the support level. So that is it for the updates. Let's get into Bitcoin. So a quick summary of what we're going to be discussing. We're going to be discussing Bitcoin dominance in relation to our altcoin season. We're going to be overlaying that chart with our altcoin total market cap, discussing the possibility for a parabolic phase. We'll be going over the weekly charts in reference to Bitcoin, any reference to the total cryptocurrency market cap. We're going over the macro charts in reference to two particular indicators, one on the 2-week chart and one on the weekly chart. And we'll be discussing the current price action for Bitcoin, next targets, expectations, bullish and bearish triggers, and scenarios. So before we get into it, a quick word from BitUnix and we'll jump on in. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay team, let's go ahead and dive on into the video. So starting on Bitcoin, let's go from the short term, build it up to the macro, and finish off with the altcoin season discussion. So as we can see guys, Bitcoin has been pushing upwards now for the last, we're looking at around 2 weeks. It's looking pretty good over here. In the last week or so, we saw a nice, massive move upwards here to 67,000 to now retest our resistance. If you have been paying attention to our videos and our posts, you would know we called this move absolutely perfectly. In fact, in our VIP channel, if we scroll back, we took a long from that exact bottom up to our resistance. We told you guys in our video we were looking for a rejection from this level back up to that $67,000 resistance, as we posted about in our free channel right over here. And now we are expecting that breakout. So we have been literally on point. So a big shout out if you've been paying attention, following along, you would have been playing this move absolutely perfectly. But we are now sitting at a resistance. And as we know guys, resistance is resistance until it is not. Now this resistance has spanned since 15th of April. So it is about a month and a bit, about a month and a week long resistance over here. So a pretty strong resistance. This resistance also coincides with the midline, which is the dotted area, the dotted horizontal level of the macro 2.5 month long consolidation. This macro consolidation is in fact this horizontal channel spanning from our range high, which is going to be this resistance over here, to our range low, which is this resistance over here at a price point between 73,000 and 60,000 US dollars. So it is a very big consolidation range, but these large consolidations move into large reactions. As we say, the bigger the consolidation, the stronger and longer that consolidation goes on for, the larger the reaction we see out of these consolidations. Think of it like a pressure cooker. The bigger the cooker, the longer it's on, the longer it's heating up, the larger the explosion from that cooker. So it's the same kind of analogy I like to use when it is consolidation ranges. The larger the depth, and the depth is going to be the distance from the high to the low, or again, the high to the high, the low to the high, the larger the equal and opposite reaction we generally see from the directional breakout of these consolidations. So we are expecting a violent reaction depending on, again, the direction of which we break up or down from. If we break down, we expect a strong reaction downwards. If we break up, we expect an equally strong reaction upwards. But the midline is a very important level. as it differentiates the bullish from the bearish zone. If we look at the bullish and bearish zone, simply the bullish zone over here is going to be anywhere above the dotted trend line, and the bearish zone is anywhere below the dotted trend line. Simply put, the bullish zone is a zone of which, if the price action is occupying within the zone, the probability of a retest of the range high is greater than the probability of a retest of the range low. And thus, while we sit above the dotted trend line, we are expecting a retest of the range high above a retest of the range low. Whereas if we're sitting underneath the dotted trend line, the probability of a retest of the range low is greater than the probability of a retest of the range high. So it doesn't necessarily tell us the direction of the price action is going to move, but it tells us there's a greater chance we will see a range high retest above than a range low retest while we are above that dotted trend line. Now, the dotted trend line coincides with that major $67,000 resistance level, meaning we are not going to be pushing much higher over here, provided this area remains as a resistance, and we will likely drop underneath that dotted trend line if we do find resistance at this level. So that is why the $67,000 region is so important, because it acts as a bullish trigger point for a directional move to the range high. It will facilitate a continuation upwards if this area of resistance is able to turn into an area of support, which we are currently trying to break out from as we speak. So let's go ahead and discuss the short term and what is happening right now, and then again we'll zoom out to the higher time frame charts. So jumping on down to an hourly chart over here, guys, we can see we have a few key levels I want you to pay attention to. Of course, again, we have got this uptrending resistance, which is going to be the uptrend we kind of bounced off from to continue upwards to the 67k region. This is still going to be acting as the uptrend of which the price action is more or less sitting in on the higher time frame. We do have shorter time frame uptrends over here. We're not really going to discuss those right now. If the bears want to take back control of this price action, and by take back control, we are talking about a directional move back to the 60k region, okay? They need to first break underneath this uptrend, meaning any price action rejection, okay, that sustains above this uptrend would be considered a healthy correction for Bitcoin on the short term, and nothing more than short-term volatility between an area of major resistance and an area of major support. It is only if this uptrend is broken do we then expect a correction lower. So let's now dive down into the smaller time frame again and talk about probabilities for directional continuations upwards and downwards. As we can see, the price action has been chopping quite aggressively sideways over here, which doesn't give us much structural indication of where the price action is going to go. If we do look at our technicals really quickly, we can see we are sitting above, again, the dotted trend line. We are sitting above the prior high. Okay, this is going to be our lower high. If we look at the structures, we have got our high point here. We have got a lower high. We have got a lower high. We have got a lower high. And we broke through that lower high, retesting that area as a point of support. So this area at 64.5k is now going to be a trigger point for the bears to take back control, but it's also a major support level for Bitcoin. So worst case scenario, if we do see a correction, we are looking for a breakdown of the 50 EMA. A loss of the 50 EMA will result in a likely move down to the dotted trend line, and if we lose that dotted trend line, we could see a correction back to 64.5k, where again we are expecting bounces to develop from. So we look at this, we have a resistance, we have a support, we are expecting any movement that occurs between this region, okay, would be considered healthy price action. It is only if we break above this region of resistance or below this region of support would we then see actual directional moves on the short term that could facilitate higher time frame movements. Anything else would be considered chop between a resistance and a support. Now, provided we remain above that 50 EMA, what we can see is the price action is slowly, gradually climbing upwards, but more or less plateauing sideways here along a resistance. We are expecting the price action to break through this level while we do have positive strength. Again, we do have positive strength as we are sitting above the 50 EMA, moving into a major trigger point. There are some worries that we are aware of. Again, the Federal Reserve speech coincides with the point at which Bitcoin is now retesting this resistance. If we do see bearish narratives or tones within that speech, regardless of what is happening within the price action, we could see a reaction towards the direction of which the tone is setting. So if we see a bullish tone, we will likely see a directional continuation. If we see bearish tone, we could see a correction back down to support. Again, no matter what occurs over here, the breakout of the support of a resistance will determine the directional continuation of the price price action regardless of what is discussed within the meeting. So we are seeing the price action move sideways, and that is a combination, of course, reduction in volatility and volume, but it also could be a hesitancy to move upwards approaching this major news event, which is going to be that Jerome Powell speech, particularly because inflation came out relatively good, which was not really expected. So a lot of people and the market as a whole could be patiently awaiting. So that is a short-term price action, guys. If we do break upwards, which I do believe we will, by what I mean by that is I do believe we're going to break through 67K prior to a loss of 64.5. Okay, it's not that I don't believe we're going to go straight up. We could, but I believe more or less we're going to be breaking through 67K prior to a loss of 64.5, as that area has now been validated by a support resistance flip as an area of support. If we do continue upwards here, guys, we are looking for a retest of the range high. Resistance areas are as follows, around 68.6 to 69,000, guys. Let's go ahead and jump over to high time frame charts. 23 hours, 24 hours remain until a weekly candle close here on Bitcoin. And this weekly candle close is going to be it's going to be massive. It's going to be super, super important, because what we can see here is a very strong weekly candle, and this is a bullish engulfing candle on the weekly. What we can see, not only is it a bullish engulfing candle on the weekly, it is a bullish engulfing candle that developed from a support resistance flip of our prior 60K high. Again, this was deviation. This was technically the highest point of the cycle, but if we look at structural formations, we look at, our high points, this is going to be our high, and this is going to be our deviation high. So this is the high point of the cycle, but this is going to be the high point. So this is our pi cycle high, and this is our deviation high. Our deviation high, again, a breakout of the prior high, failure to sustain, candle closes below, enter a downtrend, deviation confirmed. In this instance, we do not have that scenario. A lot of people were worried about that scenario, but we did not see a scenario play out. In fact, what we saw was a support resistance flip of that support level. We came down, retested, and we have now bounced. The bounce has resulted in a strong weekly candle, which has engulfed the opening price of the prior candle at $60,050. If we can close this weekly candle above $64,050, we will see a bullish close and a bullish weekly candle. Fantastic. Expect a continuation aggressively upwards if that is the case. Again, where does that price point line up with? Underneath this support level. So for the next 24 hours, Bitcoin will need to drop underneath this support level and close under that support level to see a close that will result in an elimination of the bullish weekly engulfing candle. Again, for that to occur, the narrative set within the meeting would have to be incredibly bearish. Moving over to the total 2, exactly the same thing. Strong support resistance flip of our yearly level of resistance, looking for a continuation upwards. Fantastic stuff. Moving over to the macro charts now, guys. We've got 2 indicators I want you to discuss. Number 1, the 2-week Gaussian channel 50 EMA blend. What we can see over here, guys, is we have seen this once in the past. And this is why a lot of people are saying, and myself included, we have seen a similar cycle to 2016, 2017. We had the red Gaussian channel pushing into the green channel. After that, we saw the 50 EMA break above the Gaussian channel, and we saw a continuation to the pi cycle high. What we can see here, we had the red channel breaking into the green channel. After that, we had the 50 EMA breaking above the Gaussian channel upper band, which will likely move into a pi cycle high. What I really want you to focus on here is that if we look at the 50 EMA, over time it starts to separate further and further away from the Gaussian channel, suggestive of increasing volatility and strength, okay? Until it reaches the pi cycle high, which then it starts to plateau towards the Gaussian channel, entering again into a downtrend, which gains volatility until we break into the channel, thus entering the capitulation phase. So we see again, Gaussian channel broken by the by the 50 EMA, parabolic phase initiates. We see the parabolic phase gain strength, pi cycle high, top is in, parabolic phase dissipates, downtrend initiates, and downtrend turns into capitulation when the 50 EMA crosses back into the Gaussian channel. We saw that over here, okay? We saw that over here. Uptrend, broke in, capitulation. Exactly the same thing. Now you're wondering, well, this doesn't mean anything because we can't predict when the pi cycle high will be. Well, then you'll be wrong if you're saying that, because we absolutely can predict when the pi cycle high will be using the weekly chart. If we move over to the weekly chart, what we can notice is every single time the Vortex trend indicator was retested, here, here, and here we saw a pi cycle high. So if we see the Vortex trend indicator retest on the weekly, we are assuming a pi cycle high retest. We would then assume the 50 EMA on the 2 week is going to move down into a downtrend, and the macro downtrend has started. If we take another look at this indicator here on the weekly, we can see that we have a triple validation point with the pi cycle indicator and the Ichimoku cloud, and we can verify the highs with our Vortex indicator. Again, this is an analysis no one's doing. We basically made this one up over here, guys. It's a powerful one. It's a really powerful one over here. What we can see is every single time on the weekly, okay? Every single time on the weekly, we see that the Ichimoku cloud is broken in by the pi cycle low. From that point onwards until we create a pi cycle high, the price action remains above the yellow and green line, which is the high short and low short moving average, until we create a pi cycle high. And we know that the pi cycle high is created once the Vortex trend indicator reaches the top point. Look over here. We break in, we remain above the low short and high short moving slash MMA slash MA slash EMA until the pi cycle high, which is again printed here. We look back in the past, exactly the same thing. We break into the Ichimoku cloud, we can see we remain above the midlines until a pi cycle high validated by the Vortex trend indicator. So that tells us two things. Number one, well, it tells us three things. Number one, we have not yet seen the parabolic phase. Number two, the top is not yet in. And number three, we have a clear invalidation of the parabolic phase, which is a weekly candle close underneath the midlines of the pi cycle indicator anywhere from now going forward, as the Ichimoku cloud has already been broken in by the pi cycle low. If we take a step further from this, we can say, well, every single time we see a break above this level, we see a retest of the upper band as we are retesting the prior high. Look at this, retest of the upper band as we retest the prior high. Look at this, retest of the upper band as we retest the prior high. So all these indicators match up. They are all telling us exactly the same thing, which is the market has not yet topped. We are entering a parabolic phase. It hasn't started yet, but we're entering it, and we have a clear invalidation for this, meaning if we see the break on the weekly, we can say for sure the downtrend has started, the top is in, and the bull market's over. How good is that? Let's move over to Bitcoin dominance. The altcoin season and Bitcoin dominance. This is a chart we want to be discussing very quickly because we have a lot to get through and we're running out of time. So, altcoin season, will it come, will it not? There is 4 potential scenarios at any given time in the market that could develop into an altcoin season. Number 1, we have scenario 1. The total cryptocurrency market cap rises with Bitcoin dominance rising. This will result in both Bitcoin and altcoins rising in value, but Bitcoin rises more. This is what we saw over the last 12 months. Scenario number 2, the total cryptocurrency market cap rises with Bitcoin dominance falling. Both Bitcoin and alts rise, but altcoins rise more. This would be an altcoin season. Historically, when we see is corrections on Bitcoin dominance, which lead to a top in Bitcoin, which happen while the total cryptocurrency market cap rise, we see altcoin season start. Again, we are expecting a strong rejection on Bitcoin dominance towards that 40% dominance at some point over a course of many, many months, which will actually be that altcoin season. Scenario number 3, the total cryptocurrency market cap falls with Bitcoin dominance rising. Both Bitcoin and altcoins fall, but altcoins fall more in comparison to Bitcoin. This is what we saw over the last 2 months. As Bitcoin dominance was rising, we saw the total market cap reduce. We saw altcoins get wrecked in comparison to Bitcoin. That is a scenario we saw. And scenario number 3, which is the bear market scenario, the total cryptocurrency market cap falls with Bitcoin rising. Both Bitcoin and altcoins fall, but altcoins fall less compared to Bitcoin. This is again a scenario we see in some part of the bull market, particularly nearing again the beginning of the bull market where everything kind of just gets wrecked. Bitcoin loses a lot more in terms of market cap value than altcoins initially. So again, one scenario will turn into an altcoin season, and that is scenario number 2, the total cryptocurrency market cap rising with Bitcoin dominance falling. Bitcoin dominance is retesting an area of resistance. We are expecting a rejection from this area. With that, we can see the total cryptocurrency market cap is at our area of support. We're expecting a continuation upwards. That could initiate the start of an altcoin season. Let's talk about altcoin season. If we take a look at the total 3 market cap, we can see a 5 to 6-point validation method. Number 1, which is going to be the dead cat bounce high of the prior cycle, dead cat bounce high of the prior cycle. Number 2 is the bear market resistance. This is our bear market resistance. Number 2, our bear market resistance. Number 3 is the breakout of the bear market resistance. Number 3, breakout of the bear market resistance. Number 4 is the initiation of the altcoin bull market. Number 4, the initiation of the altcoin bull market. Within point number 4, we see a major rejection for altcoins, which is around 30 to 40% rejection for altcoins across the board, which takes us to retest the red circle area, which is the pi cycle midlines. We can see we have already done that. Number 5 is the parabolic phase, and that starts when number 1 is broken. That is an exit of number 4 and an entrance into number 5 occurring when number 1 is broken. You can see that we are not yet in the parabolic phase, but we could be moving to a parabolic phase if that region breaks. Invalidation, again, a weekly candle close below the pi cycle midlines. That is it, guys. That is our video. It was a bit of a longer one, but I hope you enjoyed. Have a fantastic day. We'll catch you guys in tomorrow's video. See you then. Bye.